Hey folks, it's Vic Noble here, and as most of you probably know by now, I'm hosting a webinar in the new year on January the 16th, 2023, where I'm going to be providing more information on how to trade the Forex at the close of the London stock market. There's a great opportunity at that time of the day for trading. This strategy was actually introduced to our trading community over 12 years ago now, hard to believe. And today I have with me one of our Coaches Corner members, Henry, who you can see here in this picture, who's been trading it all these years. So, rather than me telling you, what a great strategy I think it is, I thought it would be great for you to hear from someone who's actually traded it for so many years. So, Henry, welcome, and thank you so much for chatting with me today and telling others about your experience with this strategy.
Thank you for having me, Vic. And
yeah,
I think it's a great strategy. I learned it long ago, as you mentioned.
Yeah.
And it worked for me, but it's probably not for everybody. Like there's not one size fits all in Forex at all on anything. So, but if you are like a short-term trader, like I am, and you like to understand also why things works, and then get some right. Fundamentals behind what you're doing, this is a great strategy.
Perfect. Well, I'll ask you more about that, and I just want to say something here before we get going. And I think that I just always like to do this disclaimer with people and to say that the results and experiences with trading this approach is unique to Henry, and that past results don't guarantee future profits. I think everybody knows that, and you should only use money for trading that's truly risk capital. So that means not your kids' college education fund or money that you need for groceries or anything like that. It should be risk capital that if you lost it, then it doesn't affect your life. But that being said, yeah, Henry, I want to hear more. And maybe before we get to the trading stuff, like I always like to ask people and hear about things that they like to do outside of trading, hobbies or interests. But I'm looking at this picture of you here, and that beach looks fantastic. Tell us about that.
Yeah, I live in Carlsbad, California, and that's a beach close to my house where I normally go surfing. So I love that, and that's one of my hobbies.
Oh, very cool. I just thought well, it's about 3 degrees here in Vancouver right now. It's supposed to snow tomorrow and Sunday, so this looks really inviting.
Yeah, well, it's almost 67 degrees here in San Diego, so we can't complain here.
Well, that's Fahrenheit. When I said 3, I mean centigrade, but
yeah.
Anyway, yeah, we get it. So, first of all, just to confirm to others that are listening, you've been trading the LCTs. Now, when I say LCTs, by the way, for everybody, that means London close trades. You've been trading them for how many years now?
It's since 2010.
So 12 years. Geez, that's fantastic. You seem like a pretty busy person. So how does it fit with your lifestyle, trading the LCT setups?
Well, I was when all this thing, Shirley and you came with this course, and it fit my schedule. I just moved at that time to California. I'm originally from Argentina, so and I was trying to trade a little bit of Forex before, but when I moved here, the West Coast time is a little bit difficult sometimes for trading, and mainly for scalpers, because there's all the movement and the volatility is during London, and that's kind of early for us.
Exactly.
And,
And
then this course came across and really hit with my personality, and the time that I can do it, because in my time it starts at 7 a.m. in the morning till 10, and I work from home and I travel. So when I travel, I just don't trade, and when I'm work from home, I'm attentive to this kind of trade, and they're actually they're pretty easy to spot.
Yeah.
And it's a very simple and objective thing.
Yeah.
And if I would have any critique on the thing, is that Shirley is probably the best trader that I ever seen around, and she's so good that sometimes he have like a feeling for the market that it was unbelievable. You can't teach that.
Yeah.
But I end up doing it my own thing, you know, and it helped me a lot. And I've been doing that. It's pretty, you know, straightforward and simple. I try to do some more long-term stuff, but it doesn't fit me. I mean, it's hard for me to do that.
Yeah.
You know, that's what it is.
Sure, and that's a great point to make. A couple of good points to make. First of all, you're right. Shirley was incredibly good at this, but she did have a, you know, a sixth sense of trading these things that it is difficult to teach. And what I've done, actually, I've redone the course in the process of it still, and I've tried to what I've done is made it more objective, so that it is or it isn't, you know. And I think it's going to be a lot more effective or helpful for people for things to be that way. And like you say, you know, like there's different trading styles, and this isn't going to be appealing for everybody. But then long-term trading isn't appealing for everybody either. So, you know, it depends what it is that works best for, you know, for each individual person. And, you know, one of the things about the London closed trade setups is that they're very specific kinds of trades. That's what I really like, is that there's a lot of very, very objective rules about it. And you personally, though, Henry, you have your own unique way of trading it, right? I think you like trading around the big figure quite a bit.
Yes, yes. Number one, for me, one of the most important things is that you have a bias from the get-go. You're going against the trend of the day. That's it.
Yep.
You know, and for a lot of people, even for myself, sometimes getting the right bias is an issue. But with the London closed trade, you don't have that. You know, you wait for the pair to stretch itself as much as possible, and then you go against that. And what I like that is that it makes sense for me. I mean, the traders in London that are going home, you know, they've made a lot of money on the day, and so they're closing positions, and you're taking advantage of that.
Yeah.
And some guys in New York are probably on lunch, so they're not. They will come later, and they will probably continue the trend or not. You never know.
Right. That's
but,
right.
But that's what's going on. And
yeah,
then you know, you can take advantage of that situation. That is pretty consistent, because at the end of the day, this is massive trading, and there's psychology in there involved, and a lot of people that make money on the day because, you know, some assets just move a lot. They want to book the profit, and booking profit means a retracement, and that's what we are trading in the LCG. On the other hand, you need to know that this is a probability game. You're not going to win it every time. It's not going to happen every time. Things, you know, but it's pretty darn consistent. You're going to have a pretty nice winning ratio, but you're not going to have a great risk reward ratio. So I'm happy with 1-to-1. You know, very happy with 1-to-1. I'm right like 70% of the time. So.
Sure. And in the course, I got to tell you, I did a lot of work on addressing the trade management part of it, which makes a big difference. And I think that people are going to really like that, because these trades are all hands-on. You've got to manage them, like you got to watch them. And that. Do you ever take trades that are not around the figure?
Yes.
Yeah. You do?
Oh yeah, absolutely. I do.
Good.
I do.
You just prefer the figure trades.
Right. No. You know what I do is basically, number one, I wait for the pairs to do ADR. You know, if there's not any pair doing ADR, I'm done. I'm going surfing, or I do something else. That's it.
Yeah.
I don't try to force anything in there.
Absolutely.
You know,
well, that's why you do so well at it.
Yeah. That's the first thing. The second thing is that I do have marked my support and resistance line. You know, daily and 4 hours mainly. Yep. And the issue on the LCT is that if you have weeks on the 4 hour, then those weeks are massive amount of pips for a scalping strategy. So it's not easy, you know, to determine a precise, because we're going for precision here. It's surgical.
Yeah.
You know, it's not, hey, the 5 pips here, 10 pips there, 15 pips. No, that's all your profit. So
Yeah.
you cannot mess around. It's pretty precise. That's why I like the big figures, because on the figures, these pairs normally react. It's a psychological number, and that works. Having said that, you need to understand that the figures works better in all the crosses with the U.S. dollar.
Yeah.
The figure is not as reliable on like the Aussie yen or the Euro yen, because those pairs actually, it depends on their other crosses with the U.S. dollar, so they're not as reliable.
Right.
So
exactly
what I'm trying to get is, as much as I can, is confluences. So I normally, wait for the pair to do ADR, wait for a valid swing, right, and mark my fibs in there, and then I have a zone, which is go from the 78%, 79% retracement to the 162.
Yeah.
And then if my support and resistance, goes in there, and I get that confluence, I select where I gonna trade.
Yeah.
Of course, if my figure is in there, I'll go for the figure.
Yeah.
And but you will be, as soon as they look into that, they will be surprised how many times the big figures actually has a lot of confluences with support and resistance in 1 hour, in 4 hour, in whatever, because it's just the way it works.
And that's the thing, you've been doing it for so long, and you've really zeroed in on the strategy, but the way around it that suits you. What I've done in the course, by the way, is made it generic, so it doesn't matter. You don't have to have that kind of experience that you've had, because I've taken all this stuff into,
cool.
I put it all together with the support resistance and the stretched ranges and the valid swings and all that kind of stuff. It's pretty objective. I'm quite happy with the way it's turned out. You don't.
Yeah.
You just apply it around the London close. You don't try to trade it at other times of the day, correct?
No, because what happened there is it's unique to that thing. It's we know that the forex market, all the markets actually work like a rubber band, and when it's overextended, it tends to retrace a little bit. And then on top of that, you got a time of the day where people are closing their positions, so it does happen more there. And we're playing. I mean, I'm trading the probabilities for that to happen. That's it.
Yeah. Well, here's something that you might find interesting. Actually, not so much you, but people who, like, say, live in Australia or other times where the time zone is not very good for trading the London close trade because it's the middle of the night for them. What I've done in this course is I have show completely how to use this strategy at other times of the day. They can actually set up in Asia and during London and all that kind of stuff. Not as an LCT trade. That's its own unique strategy, but using the same concepts around other times of the day works really well. And I have lots of video examples.
That's cool.
I think I got about 62 videos I've recorded so far just since October the 5th. So lots of material.
That's cool. The other thing that I like to share is that probably going back to Shirley and her amazing capacity of doing multitasking and doing a lot of stuff at the same time. That was absolutely amazing, and I try to mimic that, and I fail badly. So what I learned and what I'm doing is, let's say there's a day where multiple pairs do ADR, and then I can't just manage all of them. So I just select which is the clearest of the setup. Which one have an easy thing to do. Which of those I see easier, and I trade only that. I just don't go for the whole thing. For what it fits me and what I can see, more easy. And then sometimes I win, sometimes I lose, but it works for me.
You're exactly right. And I'll tell you something. Yesterday, which is the 15th of December, there was a lot of rate releases out, and markets made extreme moves. The stock market had a great big dump. And there was 6 trades that set up at the LCT time window. 6 of them. There's no way that I can do that. But you know that every single one of them was either made a 1-to-1 or it was a break-even trade.
Yeah, I did trade that.
Based on the way that.
I did trade yesterday.
But, good.
Yeah. On the other hand, when the Dow runs 800 points, I'm careful.
Yeah.
So I'm careful means I'm reducing my position sizing to pretty much nothing. I will still trade,
Yeah.
you know, but I will just be very careful. I'm not going to, you know, put down 1% or 0.5% of my account in risk on a day like that.
Good for you.
But
Yeah.
I will definitely still trade, and because that's a learning proposition. But sometimes I even trade, you know, a micro lot, just to have some action and just keep feeding my brain with experience.
Good
But
for you.
Don't try to go crazy when there's red flag news and the Dow is going like nuts. You know, I remember the days, you know, when Shirley was doing it. She was concerned about, you know, a triple-digit Dow, 100 points, and now it's moving, you know, 100 points is like nothing.
Yeah, very, very true. Yeah. In terms of, hey, here's something that I think is one of the nice features about this approach is the small pip risk. What's your typical risk amount, pips wise?
It depends on the pair, but they say, you know, like 15 peeps, 15 peeps, sometimes 10 peeps when it's a lower volatility pair like the Aussie US or something like that. And if I'm trading the Euro Yen or the GBP Yen, sometimes go for 20, 25 pips, but you know, I get one-on-one of those pretty easy also, you know, and then you need to learn a little bit on how the figure works, because that you know, it reacts like a pip shy of the figure, and then it's like next time it's gonna get there, it's gonna move a little bit more, and you need to give it some room to breathe and go for, you know, a stop in 25 pips from the figure or something like that, or move your whole thing. But those things just will come with experience.
Yeah, well, you'll be also happy to know that in the new course, I've actually made the stop loss placement very, very objective based on the different pairs and the different volatilities. So that's going to be a big help as well. So I've just tried to take all the guesswork out of everything as much as possible. Not having said that,
love it.
There's always going to be room for individual assessment. Nothing's 100% objective ever, but this is pretty darn close, I'd say. And I think one of the big features of this trading approach is the small initial pip risk, which makes it quite suitable for those that don't have a large account to start off with.
One point that is important is you can go on draw. I mean, on no trade for weeks. It's just not moving, and you just need to be patient. It's going to move. You know, just wait for it.
Yeah, I'm glad you brought that up, Henry, because I do want to let everybody know. It's like, you know, trading systems go through dry spells. I don't care what it is. My old VIC trade was a great trade setup, but it goes through dry spells. If you're trading divergence, it goes through dry spells. Head and shoulders, it doesn't matter. This is no exception, and you can go for, you know, you can go for a week without a trade. It's possible. It's not very common, but it does happen, and it's you because of the accuracy and the good risk rewards that you can get from it. From these trades, you got to be patient and just wait for the trades because it's well worth it.
I would, for everybody considering this, just take it seriously. You know, just put some time on it, practice. You know, and you can practice on a demo account and or a micro lot. That's even better. And get used to it. Get your feet wet into the market with this because it works. I just love not being on the market at night and sleeping with my cash. I don't know. That's
Listen.
Week is over. No. You know. And sometimes you let your profit run a little bit, and then just be careful. You know, because you know at the end of the day, the spread's wide a lot. So you better be really in the money to leave anything on the table. I normally just take my profit and that's it. I'm done, you know.
Yeah, for sure. No, I covered that in the course as well. It's all, these are all important points, so people need to know about that. And
a lot of people ask me, you know, how much money I can make. I cannot tell you because it will depend on how you approach and how you adjust the thing. Yeah. You need to learn how it works. That's it. Then money is going to come.
Absolutely. Trading, this is the thing about trading results. Nobody gets the same trading results, and it all boils down to trade management. Somebody gets out for a 1-to-1 reward risk. Somebody else holds it for a 3-to-1 reward risk. Well, who's right? You know, so whose results do you use?
something that is a little bit more advanced, and then they can look into that is, hey, you can look into how is the overall trend of the pair is going, and if this is just a retracement on the day, in favor or against the main trend, and you can jump in the main trend, you can let something on the table to run. Mm-hmm. I normally don't do that, but it is a good idea to try it if it fits you.
Yeah, for sure. And that's the main thing is that the strategy itself is very simple, and it really doesn't depend on the trend at all. Which is not just one less thing to have to worry about. But yeah, you can make these higher time frame observations and do it accordingly. So anyway, yeah,
and no indicators, nothing.
No, there's no indicators.
It's all price. It's price action 100%. I also look sometimes into like fast reactions or like big legs where price just moves a lot, and even in the 15 minutes or the hourly chart where price really reacted before, to use them as a supporting system. But I look for confluences and where I'm gonna trade. But that's kind of with experience. You need to just do it yourself.
Sure. Well, that's another thing too, is that the rewards trading this way are happen very quickly. You don't have to wait for a long period of time. You can get them in 15 minutes. And the other thing is that when you're trading short term, your money is not exposed to the market for very long. You get it out, like you say, you sleep well at night. You don't have overnight risk, none of that kind of thing. So yeah, but it depends if it's suitable for each person's psychological profile. Everybody's a bit different.
Right. You go for the 79%, and then the pair goes against you, and you take the loss. And it reacted to 162, and I'll take it. I'll take it again.
Yeah.
And sometimes, I assume my loss at first, and then I recover my money. I love that. It gives you revenge pretty quick sometimes.
Yeah, very good. Well, that's a very advanced, more sophisticated way to trade this, and that'll be for people to figure out once they get experience with the basic way that I'm going to teach them. That's going to be very, very simple, easy, And by the way, everyone, once I have the course completed, which I'm still working on now, I've completed the course, but I'm doing all the recording right now. It's going to be included with our CC short-term trading service. It'll be available on its own if somebody wants to buy it, but it's going to be included. So the complete methodology is going to be, like I say, included, all of the videos of the trades, the tips, and all that kind of thing. That's just great, Henry. I really appreciate you you're letting us know your experience with it. And I just want to, first of all, thank you so much for this chat. I really wanted others to hear from someone like you who have used the strategy successfully for so many years. I think it really speaks to the fact that this has been a very reliable and robust strategy if it's used properly. And I hope that by hearing you talk about your experience with the strategy, that it not only inspires other people, but gives them confidence that it actually has been a very good approach for generating consistently profitable results for a long time. There's obviously losses. I mean, that goes without saying, like with any system, but that's just part of playing the odds game, and no problem with that. So thank you, everybody, for listening. I really appreciate it. If you have any questions, just let me know. And just a reminder to make sure to register for the London Close Trade 2.0 webinar that I'm going to be hosting January the 16th in the new year. There's a link in the text below this video or in the email that you received. And even if you can't make it to the webinar, but you'd like to hear more about the strategy, just register anyway, and then go to webinar. Will automatically send you the recording. Okay, and so that's it. Thank you again. And from all of us at Forex Mentor, a very Merry Christmas, Happy Holiday Season to all of you. All the best wishes for a healthy, happy, and prosperous 2023. Thanks again. Take care.